What's going on, you guys? This is Aaron Forex Scott, member of the Winner Circle Group. We're connected with the leading source of education for Forex trading and cryptocurrency trading. If you're trying to learn Forex, I commend you. It is a foreign language. It will take some dedication and may take some time. Some people may catch it faster than others. It may take you 2 weeks. Some people it may take 2 months. Some people it may even take 2 years. But once you learn this language, the language of money, once you learn how to read the charts, because the charts will speak to you in a foreign language, just like any other foreign language. Once you learn that language and you're able to understand what the charts is telling you, then you will have the opportunity to take trades, jump into the foreign exchange market, and earn profits based off of simple market structure, strategies, technical analysis, things of that nature. So I'm gonna go through some simple points, some basic market structure and technical analysis in this video to share with you some setups that you can look for, how to draw up your charts, how to look for a trade setup, when to get into the market, when to get outside of the market, things of that nature. Right now, we're looking on tradingview.com. Tradingview.com is a free platform where you can draw up your charts. Once you draw up your charts, it will save it. That way, when you come back to it, you're supporting your resistance zones, your trend lines, things like that will always stick to your chart. So if you're looking for a platform to draw up your charts, you can simply go to tradingview.com, open up a free profile, and you can start there. Now we're looking at GBP/JPY on the hour chart. Actually, we're on a 4-hour chart. The best thing to do when you're drawing up your charts is to look at it on a higher time frame. When you look at it on a higher time frame, your daily, your weekly, your monthlies, you're able to see what the market is doing. You're able to see the natural trend. Therefore, you can move to the lower time frames, your 4-hour, your 1 hour, things of that nature, and you can catch your entry. But right now, I'm gonna go through some basic training on what to look for in the market. We're going to point out some key market structures such as head and shoulders, inverted head and shoulders, um, harmonic patterns, other patterns, things of that nature. How to draw up your trend lines, how to find actual entries into the market. So I'm gonna just basically scan through GBP/JPY. Like I said, we're on the 4-hour chart, and I'm gonna give you some ways to where you can see where you could have gotten inside of the market and where you could have taken some trades. That way you can profit off of the trend of the market or the trend of a certain pair. Right now, I'm gonna just look at GBP/JPY. I'm not gonna go into any more pairs like that because market structure, technical analysis works for every single pair. Now, some pairs may move faster than others, especially your Great British Pound pairs, your Euro pairs. They tend to move a little more volatile than others, but all technical analysis, price action, and market structure works for every pair, whether in your foreign exchange market, stocks, commodities, futures, things of that nature. So hopefully you learned something. If you like the video, please press the like button, subscribe to the channel. We're gonna have many more training videos, many more strategy videos in the near future. If you're looking on YouTube, if you're on Facebook, simply share the video, like the video, comment what you liked. If you have any questions, feel free to ask. So what I'm going to do is I'm going to look for certain things in the market structure, and I'm going to share with you some ways that you can jump in the market and how to draw up the charts. That way you know when to get in the market. And just off of looking at the judge of my eye, I can see already that we have a trend line. We're having a small retracement to the downside. Even though the market tends to move up and down, up and down, up and down, the market will never move straight down in one line. But as you can see, we have a high here. This is the highest point up until this date. Well, within this week, I believe this may be within the month. This is a high. You have a low. Then you have a higher high. You have a lower low, lower high. I'm sorry. You have a high, a low, a lower high, a lower low, a lower high, and a lower low. If I was to draw these out, let's see if I can draw these out real quick. That way you can see it. You have a high here. You have a low here. You have another high here, which is lower than the previous high. You have a low here, which is lower than the previous low. So forth and so on. You get the picture, right? I'm going to go ahead and delete these. But that goes to show that you have a high, a low, a lower high, because this high is lower than the previous one, so that's a lower high. You have another low. It's lower than the previous low, so it's a lower low, lower high, lower low, so forth and so on. Now we actually have another high that meets this high here. So it's, in a sense, while this was going on, the best thing to do is, the first thing to do is draw a trend line that connects your highs and your lows. So I'm going to go ahead and get a trend line. This is your trend line. This is one of the tools. This is your tool base on this left-hand side of TradingView, where you can utilize different tools to draw on the charts. So I'm going to take a line from this high and connect it with the lower highs. We have a high here. We connect it here. It won't connect there. If I connect it maybe here, in a sense, that might be a pretty good spot to do it because it connected more than one. Then I would draw it all the way down. That's your upper trend line. Then you have a lower trend line starting from here. You have your low, you have another low, and your lower lows here. So you have a basic trend channel. This is called the trend channel. And once you get a trend channel, depending on when you catch it, you can basically trade based off of the trend channel. So if you have a high, you have a low, you have a higher high, a lower high and a lower low, you know when it gets back to this channel, 9 times out of 10, it's going to have to react off of this trend line. It's either going to bounce off the trend line and come back down to the lower trend line, or it's going to break the trend line and change the direction of the trend. Because as of right now, as you can see, if you look at it, it's going downward. That's why you have a higher high, a lower high, a high low, a lower low, things of that nature. So you're in a downward trend channel. So when you're in a channel, you basically wait for a reaction of either the high or the low. Sometimes it'll, just like here, it won't necessarily get all the way to the bottom, but if you use market structure and you look to the left, you can see that this price point acted and reacted to previous price action based off of here. You have a head and shoulders here. We'll get to that later. But once you have your trend line drawn out and you wait for a reaction, as you can see here, it came to the low. If you get to this low, let's zoom in a little bit, and you'll notice that it was reacting to the low. It bounced off of it a few times. This is an opportunity to where you can jump in for a buy and ride it back up to the top. And if you jump in for a buy, as you can see here, it touched the trend line, it bounced up, it came down, touched the trend line again, it gave you exhaustion, which is a wick. I'm gonna go ahead and zoom in so you can see it, which is your first indication that it may not break through. It's going to actually go back up to the upside. Oh, get rid of that. This candle here, I'm gonna go ahead and zoom in a little bit more so you can see it. It looks a little skinny. Well, hopefully I can get it to where you guys can see it. Zoomed in enough. This pin bar is an indication to where you're going to get a change in direction. As you can see, the market came down. It caused a long wick, but it came back up and it closed at the top. This is called an inverted hammer. That is one signal that you are going to get a reversal. That is called candlestick patterns. That's called price action. When you're utilizing price action in conjunction with technical analysis, you'll know when to get into a trade, when to get out of a trade. So this is your first signal that price will reverse itself, because at a certain point it was coming down. It was coming down on a downward trend. It touched it, the trend line once, came up, came down, touched it again. It gave you a pin bar or an inverted hammer, which is a signal that you are going to get a trend reversal. So when you see this, certain things like this, market structure and price action, you can get in for a buy, place your stop loss a few pips below it, right. Depending on your lot size, as long as you're utilizing risk management, you can take this trade. If you're confident in your technical analysis and your price action, you can simply take the trade, put a tight stop loss, and let it run. And as you can see, it never came back down to the trend line, and then it actually went back up, all the way up to the top of the trend line. If you measure this out from this pin bar, if it was to break the pin bar, and you take it all the way to the top, it's almost 60 pips. 60 pip move to the upside. Now, once you get to the top, you'll wait for a reaction. Here, you have a break. When you get a break of the trend line, you don't want to jump in the trade right away, because instead of a breakout, this can be a fake out. What you want to do is you want to wait after the break. As you can see, you have a break of your trend line, which is a sign that there is going to be a change in direction. You're already getting a change in direction within your trend line, but once it breaks the trend channel, it's going to give you another signal that is going to continue to go to the upside. So once you get the break, you wait for a retest. It came back down to retest. The market almost always has to come back down to retest the previous price to make sure that it's going in the right direction. So when it breaks any support and resistance zone, if it breaks any trend channel, or if it breaks any structure, you wait for a retest. If it never retests and it shoots to the moon, that's okay. The safest way to trade is to wait for a retest. So what you see here is it breaks, back down to retest the trend channel. It's now using it as a floor. And then once you get a signal, an engulfing candle, which is this candle here, which comes higher, is much bigger than the previous candles before, then you know that price is going to continue to the upside. You can jump in for a buy, and as you can see, it continued to go up. It continued to go up. That's about another 40 to 50 pip move right there as well. I'm sorry. This is much larger than 50 pips. Let's see. I'm on a 4-hour chart. I forgot. I thought I was on an hour chart. This is a 300 pip move to the upside. So the first pip move, if you had a quarter from the downward channel, this was over 500 pips all the way to the upside. I'm sorry. It's a 4-hour channel. I thought this was on an hour chart. But from the downside, from this pin bar, all the way up to the upper channel, which is a 500 pip move. And then once you get the break, you get another 300 pip move to the upside. Let me make sure. I don't want to read this wrong. Let me go ahead to go to my long and short position. Go from the long from here. All the way up to the top. $140, 232 pips to the upside, which is not bad. That is an excellent trade if you were to ask me. But we're going to move on. That is one structure or market structure that you can utilize, is trend channels when you're trading Forex. And once you get a break, like I said, once it breaks your trend channel, you wait for the retest, which is here. It consolidated right on that upper trend channel. It gave you an engulfing candle, which breaks the previous high. So now you have a higher high. Is an indication that it's going to continue to the upside. Jump in for a buy, and you ride it for a few days. This is maybe 2 days or so. 200 pips in 2 days. Not bad. Not bad for a trade, in one trade. Let's continue. That is basically one market structure that you can use. I'm going to do another video to share with you some other market structure. I'm going to go over some head and shoulders patterns. I'm going to go over some inverted head and shoulders patterns. I'm going to go over the teacup patterns, things of that nature. But this is to basically share with you how to utilize trend channels to box in the market and wait for a break. You can either wait for a break, or you can trade within the trend. As you can see, it bounced from a high to a low to a high to a low, and it continued to bounce in between the channels. So you can utilize that and trade from the channel and wait for a break. So hopefully this video is of help to you to get you to understand market structure and how to utilize trend channels. That way you can take advantage of the foreign exchange market. I'll see you in the next video.